We're half an hour away from the Open in Hong Kong, Shenzhen, Shanghai. You're watching The China Show. I'm Annabelle Droulers with Rebecca Choong Wilkins.
Our top stories this morning. Asian stocks rally as China announces steps to boost consumption, including growing people's incomes and stabilising the property market.
China set to release activity data for the first 2 months of the year, with the economy expected to show signs of stability despite a trade war with the US.
Plus, we have lots of exclusive interviews coming up in the next 2 hours. We speak with Chinese autonomous driving firm WeRide and EV maker Leapmotor and the Philippines' largest telco, Globe.
All right, taking a quick look at the market action to start the week here. Actually, there's a fair bit of green across the screen this morning, so it sort of translates to what we had on Wall Street on Friday, because we saw the S&P 500 ending the session more than 2% higher. Futures are a little bit under pressure so far in the session, and again, it just points to perhaps that level of uncertainty of really what's ahead. This week, of course, it's really all about central bank decisions, but if there's really one takeaway as well, it's that a lot of those are expected to stay on pause. So we've got the Fed, for instance, BOJ, just some of the ones to be highlighting. But here, as we can see, really equities, again, they are moving higher to start the week. Tech stocks as well to note. We've seen Samsung, for instance, jumping 5%. Yes, it has been that story of a lot of money moving back into Chinese tech names, but still, we do have an NVIDIA conference coming up this week. Quantum, AI, they're going to be some of the key themes to be tracking. Samsung, you can see there, those early gains. But let's take a look, as I said, Golden Dragon Index, how that closed in on the Friday session, because we did see lots of movement coming through in terms of the US session, broader US session, but also those expectations around what we saw for stimulus measures, for instance, the supportive policies that were announced again going into the weekend as well. But the Golden Dragon Index there up 2.7% into the close. And futures today, what we're looking ahead to, activity dump as well to note, something that's going to be really closely tracked. Should show some signs perhaps of stabilisation, maybe a little bit of mixed numbers here, but you still do see futures pointing to the upside.
Thanks, Belle. I'm going to pick up on your point there. Activity data dump today, because it is one of my favourite days of the month. We have a big data dump coming through. We have home prices for new and used homes coming through this morning around in about half an hour or so. And then later on, we will have activity data. It's going to be the first hard data that we see on the economy coming through so far this year. But to your point about that optimism in the market, Belle, we are really sort of looking through that at this market stock rebound. And the whole focus on that is really about the consumption plans. We had a statement coming out from the State Council reported by Xinhua on some of the plans that Beijing is mapping out when it comes to consumption. Stay with that story, because in this afternoon, around 3 p.m. or so, we're going to have this briefing where potentially we're going to see more details laid out, but mentions there of stabilising the property market, stabilising the stock market, as well as some methods to sort of raise income and raise wages as well. And finally, Baidu, we had this release of a new reasoning AI model that potentially can tape on DeepSeek, helping a little bit of, I guess, sort of supercharge some of that optimism back into the market. We did, of course, have a slightly sluggish market through the end of last week, but we did manage to close about sort of 1.6% or so higher on the CSI 300. The Hang Seng didn't quite manage to close higher for the week itself, but we'll continue to eyeball that, Belle.
Yeah, interesting to see how Baidu trades in the session, given that it has sort of seemed to maybe fall a little bit behind in the AI race, even though they were an early leader there. But let's get back to that story you were discussing there. China taking those steps to revive consumption by boosting people's income. That was the plan announced by China State Council, reported by Xinhua on Sunday, and comes ahead, as you were saying, ahead of the data dump coming up in the next hour. But let's get our China correspondent Min Min Lo with us this morning. So we can start off with that plan and the reporting that we had over the weekend. So what exactly is expected?
Yes, it's a pretty wide-ranging action plan. The government planning to create this sustainable or reasonable growth in people's income, to create a mechanism to adjust the minimum wage, also other measures to promote investments that would support consumption, including, for example, extending those visa-free policies to certain countries to attract inbound investments, to create these tourism, ice and snow festivals, for example, example, as well as other measures related to people's social welfare, incentives to promote childbirth, to reduce that demographic drag, subsidies for childcare. So pretty wide-ranging. And you mentioned as well those measures to stabilize the property and stock markets, because these are two important channels that people use to accumulate wealth. And this afternoon, 3 p.m., that's when we could get more details from that press briefing, a combined presser with the PBOC, the Ministry of Finance, Ministry of Commerce, and the NDRC, which is the economic planner. So really a whole of government approach to try to boost consumption here amid this inflation data that saw a negative print for the first 2 months of the year, the first time since 2021.
And in some ways, I think that briefing that's come back is sort of outdating the economic data that we're also expected to see. But just give us some highlights. We're going to finally get activity data for January and February.
Yes, the first big data done for the year. It's a combined data for January and February. And actually, retail sales is expected to pick up to 3.8% compared to the full year data last year of 3.5%. And fixed asset investments expected to stay the same at about 3.2%. Property investment, though, that's coming down. The reduction of 8.5% versus a decline of 10% last year. And you look at the new home sales data so far, the home prices have been declining at a slower pace over the last few months. So it's possible we could start to see the stabilization and bottoming out of the property sector sometime this year. Industrial production, though, coming in at 5.3%. That's a forecast for Jan and Feb compared to 5.8% for the full year last year. So a little bit of pullback there on the industrial production print.
Okay, Minmin, thank you so much for breaking all of that down for us. That was China correspondent Minmin Lo, of course. And we're, of course, set also to get this Chinese activity data that Minmin was just talking about at the top of the next hour. We're going to have instant analysis on that from the team at BofA Global Research.
Also ahead, we've got a strong slate of exclusive interviews. In a few minutes, we've got the CEO of autonomous driving technology firm WeRide. They're hot off their first earnings that have been publicly released as a listed business on the NASDAQ. Later, we've got Ernest joining us. He's the head of Globe Telecom. That's the Philippines' largest telco, joining us at the bottom of the hour. And ahead in the following hour as well, we're going to hear from Michael Wu, co-president of Chinese EV maker Leapmotor. Counting down to the open of trade in Shanghai, Shenzhen, Hong Kong. This is The China Show. We're watching shares of Chinese self-driving company WeRide on Friday because it reported earnings before the bell. It was actually their first earnings release as a listed company on the NASDAQ. Now, we saw the share price really rising intraday, closing up 13%. That was actually despite losses widening in the fourth quarter. We also saw revenue declining. So an interesting earnings release, and certainly one, even with those sort of softer or weaker spots, still was interpreted very positively by a lot of analysts and traders. Let's get more now with the WeRide founder and CEO. This is Tony Han joining us this morning for an exclusive interview. And Tony, I want to get your reaction to those numbers because, as I said, there were some softer spots, but still we saw a positive market reaction. So what stood out to you in particular?
I think over the past year and the first quarter, we do have some a kind of increasing expense, but overall the technology has progressed very well, and we are expanding to like 30 cities 30 cities in 10 countries, and our robo-taxi has been announced, and like by the mid of 2025, we will have 50 robo-taxi running in the Uber platform in Abu Dhabi. And so there are lots of progress. I think that's the exciting progress in both R&D and the operation and in the sales numbers, especially for robo-taxi and the new products. All of these factors combining together give us a very good performance in the stock market.
Can you share some more details on the expansion? Because just to give people some context here, speaking about the robo-taxi fleet specifically, you've got around 400 vehicles in that. 300 roughly are in mainland China. The rest are abroad. lots of those, or are expected to be at least in the UAE. But where would you go in the UAE or in the Middle East more broadly, and where would you also go next in other international markets?
So, in UAE, we actually has already started to operate in a major area in Abu Dhabi, like the Yas Island, Satis Island, and the Ras to Said International Airport, and many key areas in Abu Dhabi. And we also start our robo-bus in trial operation in Barcelona, and also we have our robo-taxi robo-bus operation in Zurich airport, and also robo-taxi operation in Zurich, and we will have more to come, maybe in Japan and also in France. So there are lots of cities like we are trying to explore right now, and we believe like. One unique thing of WeRide is WeRide is a global company, and we try to expand our autonomous driving service to the global market. And we are building a very strong business development team, very strong sales network, and we are trying to build very general autonomous driving technology to support operation and service globally. So that's roughly our rough plan about expansion in the global market.
Tony, I want to pick up on that point about your expansion in the global market. I did see that pedestrians and riders were able to ride one of your minibuses for free in Barcelona last week. That was a trial, the robo bus that you mentioned just then. So beyond the robo taxis, what is the strategy and what are the targets for expanding vehicles in the minibus area, in the van area, and where are the markets that you're focusing for those sorts of vehicles?
So I think so for the market that we try to focus, that is mainly for some market that are short of labors. So one thing we don't want to do is we are not killing humans' jobs. We are trying to solve some society issues that is for some market that there's an aging society and short of labors, and we want to try to use a machine to fill the gap between the actual demand and the shortage of labor. So that's what we are trying to do. So besides robo-taxi, like our robo-sweeper is trying to fill the gap between the shortage of the manpower and the high demand in the sanitation industry. And for robo-van, same thing for logistic delivery. And for the minibus in public transportation, in some European countries, they are short of bus drivers. So we will focus on these markets that have some shortage, especially driver shortage problem, and we try to solve it with, we want to supply a solution with much more economically efficient and much safer solution. And if you sit in our robo minibus, you can feel like the smoothness of this robo bus is kind of even better than experienced human bus driver. You never feel like this kind of motion sickness or jerkiness like you usually experienced in a bus. In minibus, it's just like you sit in a private cabinet and drive by your private chauffeur, and it's very smooth, and the view is fantastic. You're just like sitting there. So I believe with all of this, we can supply a very good user experience to our users.
You talk about places where there's aging populations or maybe a shortage of labour supply, and of course you mentioned Japan as well. So this is clearly going to be a key market. But I want to talk about that business model that you have as well, because the approach of WeRide is to find local partners in each market, sell the vehicles, charge a fixed service fee, have a revenue sharing agreement in place. You already have this partnership with Uber in the Middle East. Would you look to also partner with Uber in Japan?
Oh, so that's a very good question. So basically, we want to, our philosophy or methodology is like we want to closely work with our partners, but for the expansion, we don't want to become dominant. We just want to be a kind of autonomous driving technology and the transportation power supplier. So we want to very well align with Uber's expansion in Japan, but that's not saying we are not doing Japan market. If Uber don't have a very eminent plan to expand in Japan, we can also find some local partners. Actually, for minibus, we have already started. And there are several, I would say several dimensions about expansion. One is like geographically, how to expand. The other one is about products. Like, for example, in Europe, like minibus is very, very kind of people's favorite products, because public transportation, people like to take public transportation in Europe. So minibus, we focus our minibus in the European market. In Japan, we are also starting the market. Yeah, that's how we expand.
But going to Japan in particular, I'm interested because Uber is in Japan, so that would be a natural partner for you. How, though, are you also going to be going up against competitors in this space? Because Waymo, for instance, and that's a subsidiary of Alphabet, also has its own autonomous driving fleet. They're also looking at expanding into Japan. So with your business model, how do you compete with names like Waymo to be the partner of companies like Uber?
Okay. So I think our main strategy is trying to expand our robotaxi service in a very efficient and in a very stable way. And good thing to team up with Uber is like Uber has already have a very strong network of human driving taxi. Okay, human driven taxi. And the thing is like, when you adopt autonomous driving technology, like for example, if you want to take over one city and has a very good estimate of time of arrival, you have to deploy at least 1,000 or sometimes 5,000 cars in that single city. That causes a huge burden. On the other hand side, the collaboration pattern of Uber and WeRide is like we roll out the robotaxi in a hybrid mode. That is, some of the orders requests will be fulfilled by robotaxi. Some of the order will be fulfilled by the human drivers. But to user, it's kind of a very smooth and transparent experience. I think this kind of combination gives us a very strong advantage over our competitors. To my best knowledge, like in the global market, like the combination of WeRide and Uber is the first of the case. No other competitor have ever done so, and we look forward to keeping this kind of computational advantages.
One of the ways, though, of course, you can compete is on price. I mean, yeah, but on competition around price. I mean, I know that in the domestic market as well, you're looking at having dynamic pricing, which I kind of understood as you would be looking at offering discounts. I mean, how much cheaper can you go, not just against names like Waymo, but also the competitors within China? Because there is Baidu, Pony AI, Momenta, Deep Route, Didi has its own robotaxi fleet. I mean, it's already quite a competitive landscape.
So one strategy of WeRide is we don't want to compete for the price. Frankly speaking, I think there may be several competitors. Actually, that's not many. Only very, very few competitors in China can supply reliable and efficient robotaxi. Not that many, although many competitors claim that they have robotaxi fleet. But if you look at it, there are only at most 3 competitors can do robotaxi operation and fleet in China. Among all of this, I think WeRide, with its strong technology, strong record, so far for this 400 fleet of 400 robo vehicles, we have 0 regulatory discipline due to our system failure. So that's an extraordinary number. We are so proud of our safety record. WeRide has 4 autonomous driving permits in 4 various autonomous driving operation and trial permits in 4 countries. There's only one company have a permit from 4 countries. So for that kind of competition, we will focus on the reliability and the experience. And I personally don't think autonomous driving or robotaxi and all relevant products has come to a competition for us to compete against price. It hasn't arrived to that stage yet. I believe the final winners will be the winner who can supply the best quality of the service, not simply lowest price. I
want to ask as well about the other people or other businesses that you're working with? NVIDIA, of course, stands out. You're using the Blackwell system, for instance, to build your computer unit. What kind of contingencies, though, do you have in place if there's a move from the US to further restrict Chinese companies' access to this sort of technology?
Okay, so first of all, I would say there are several alternatives. Like WeRide as a global company will do business in all over the world, mainly focus on European market, Middle East market, and Japan market, and Southeast market. So for the chip suppliers, and if there are some restrictions on certain area, and we can always adopt alternative approach. Frankly speaking, for the SoC, for the car industry, or for the autonomous driving, there are several options. Okay, but to us, we do want to see that if possible, we can supply the best quality and quality to cost ratio, best ratio product to the
right.
consumers. Yeah, that's
Tony,
our strategy.
Just a quick. Ernest, thank you very much. A quick one before we lose you. Your plans for a secondary listing in Hong Kong?
Okay, so first of all, we haven't made any announcement about our about the Hong Kong IPO. We don't have any announcement yet. If we have such announcement, we will let you know in a timely manner.
Okay, all right. Sounds like maybe there's something going on in the background, but nothing to say just yet publicly. That was the WeRide founder and CEO, Tony Han, there in San Jose. Thanks so much for joining us for that exclusive interview. We'll have plenty more ahead. This is Bloomberg. All right, some of the stocks we're watching this morning here, keeping an eye on Baidu, up a little bit in early market, but they've just released a new AI model to take on DeepSeek, not really outpacing the gains for Alibaba or Tencent, though. Switching on to take a look at Geely as well, because they've just announced a new cost-cutting spree, really trying to catch up to their rivals. Again, underselling or underdoing what BYD has in early market there. More ahead.
Good morning and welcome back. You're watching The China Show. We are counting down to the open of markets today, and it does look like we are poised to take things higher. It's really focused around this optimism for the consumption plans that Beijing is set to reveal a little bit more detail around that this afternoon. We had some news over the weekend as well. And in fact, Belle, we were able, in fact, to see a lot of this optimism coming through on Friday. That was able to offset a pretty sort of lackluster week that we did actually have. CSI was able to end higher, really just on that Friday trading. Same with the Hang Seng China Enterprise. Hang Seng itself wasn't quite able to take the week higher, but yeah, let's see what we do today.
Yeah, we've got futures actually that are pointing to some pretty healthy gains, up more than 1% in the early goings. But not just focusing on this consumption briefing coming up later, we've also got the data dump coming within the next 30 minutes or so. So that's also going to give us sort of a bit of a spot check on the health of the Chinese economy. It's the first one we've had so far this year. New home prices, used home prices, they're about to drop. We'll get those when they come in just a moment. But here you can see broadly for Chinese equities, mainland markets that is, they're moving a little higher to start the week. Let's shift on, take a look at Hong Kong as well, given, as you said, we did have some mixed trading last week. But again, starting the week off on the right foot, essentially. We've got the Hang Seng moving 1.2% to the upside. Watching tech stocks in particular here today. There's just generally a lot of optimism around tech in the session so far, given you've got this NVIDIA meeting, one of the highlights this week as well. New home prices, they've just come out, so we've seen them actually going a little bit backwards. So deterioration or a contraction of 0.14% on the month. That's for February. The prior reading had been negative 0.07% instead. Used home prices, those are fairly stable, but I do wonder as well, the seasonality factor, given we also had Lunar New Year break, maybe around this time, and maybe people just not deciding to buy properties?
Yeah, well, I mean, it's a hard one to judge, right? Because typically we had quite an early Lunar New Year, but typically Lunar New Year is when we hope to see this sort of spike, and then perhaps in February there's a little bit more of this lackluster feeling. I mean, essentially home prices, new home prices that is, at least falling for a 21st straight month. But what analysts have really been looking for is a slowdown, any kind of decline in the pace of those falls, and we have somewhat seen that over the last couple of months. So some perhaps green roots coming through that at least we may be seeing a bottoming out, at least going into the next 6 months or so.
Yeah, well, you've at least got some Chinese property stocks that are still moving higher in the session. China Vanke there, for instance, standing out 2.8% to the upside. And again, you did have those announcements over the weekend that there would be these measures to stabilise the property sector in particular. But let's get on to this push, that push from Beijing for economic expansion, tech innovation. It is fueling optimism that Chinese stocks are going to continue to advance this year. Our equities reporter, April Ma, joins us from Singapore. So, April, this special action plan to boost consumption, this briefing coming up later this afternoon, what exactly is the market saying about it so far?
I would say that if you would ask me on Friday, I would feel that investors were saying that consumption was still more of a tactical trade or more of a transitional sector after all the excitement over tech. But I think that after the guidelines over the weekend, I think there's a lot more conviction. The reason I say that is because the guidelines talked on every aspect of consumption from the demand side to the supply side without actually mentioning vouchers. And I think that's exactly what the market really wants to hear, because vouchers are a one-time thing. But if you address people's wages, if you address paid leave, if you address maternity protection for pregnant mothers, and if you address those areas such as pediatric care and elderly care, that's when people are going to feel that the safety net is enough to support them to spend a little bit more on those durables or on those discretionary items. So yeah, I think the conviction has become a lot stronger over the weekend.
April, what is this sort of broader shift by Beijing on consumption, perhaps even a structural shift happening on consumption here? What does that mean for the tech rally that we've seen? Does this give this a different type of momentum or a different type of longevity to the rally?
I would say yes, as long as tech can hold on to those gains while consumption does its thing, those consumer stocks edge higher. I think that means that there's still a lot more upside for the tech sector to go. If you look at the guidelines, a little bit down towards the bottom, there is also a section mentioning more consumption on tech-driven demand. So in China, we're talking about like service robots, we're talking about AR, VR glasses. Right now, the thing is, if you want people to consume, the key sticking point right now is that it's not that people don't have the money, they just don't, they really need a reason to go out and buy more. And tech is going to be a very strong driver of that. If you have these new gadgets, I think people will be interested.
Yeah, and actually, you know, thinking about the tech rally more broadly, it is going to be a big test this week just because we've got so many earnings that are coming up. Xiaomi, for instance, other names, Tencent, for instance. What is going to be the main thing that investors will be listening out for in the earnings calls?
I think obviously is how some of that AI excitement is going to play out on the cash flow end, and how that is seeing an uptick in their capital expenditures. Like we saw with Alibaba, the big leg up was all about the increase in capex. So if we see that broadening out among the other tech giants, I think that will give the tech rally more legs.
Thank you so much. That was Bloomberg Equities reporter April Ma joining us from Singapore. And for more on Chinese markets, let's bring in our Bloomberg M-Live strategist, Mark Cranfield, also in Singapore. Mark, let's start with Chinese markets. It's a very happy Monday. What are you expecting through today and through the week? And I suppose also, does the January, February data, does this even really matter to investors given it's pre-stimulus?
Yeah, it's getting quite crowded here in the Singapore office. Do you want to come down as well? We've got a little bit more space. The data, yes, as you say, is It's a bit backward. It's a bit backward-looking to some extent. And anyway, as April was correctly saying there, really the emphasis is very much on the AI story. And what investors want to hear this week is really, so you've got the three stocks here that you mentioned, Xiaomi, Meituan and Tencent. They are three of the 5 largest stocks in the Hang Seng Index, all reporting earnings this week. But what investors really want to hear about is their outlook on how AI will help their earnings in the months and years ahead. That's really where the picture is going to be. Nobody really expects that they will be able to say that the AI story is boosting their earnings just yet. But they're very hopeful that a lower cost from the DeepSeek related products will help them in the future, particularly in relation to the cost of companies like Nvidia. So that's what people will want to hear more of. Providing they come up with a positive story on that front, there's no reason why those kind of stocks can continue to move well, particularly given that people are starting to lose faith in the so-called US exceptionalism story. We can see the cracks appearing. If you look at the US equities have generally been declining this year, the US dollar is getting weaker. That's a double whammy really for people invested in the US, and they're looking for other places to send their money to invest. The China story is gaining traction, but it's probably still underinvested. If you speak to people around the street, it still suggests there's money on the sidelines which hasn't gone to work in China yet. Plus you've got the European story as well. Very big vote this week. If Germany gets approval to do more on defence spending, that will enhance the European story as well. So you've got a couple of things going on here. People are moving away from the US. They're looking for a new story. China certainly fits the bill, and probably Europe does as well. That's very good news for investors who want to diversify outside of the United States.
I want to talk about, that diversification away from the US. Also, one of the key themes this week could end up being that softer dollar story. Can you talk us through the dynamics that are driving that, and also whether you see it being shifted at all by the Fed meeting later this week?
Yes, the Fed certainly comes into the picture, particularly if they're not going to change interest rates. Nobody expects that. But it'd be very important what Jerome Powell has to say, particularly during the press conference. Now, clearly, investors are looking for how he feels the employment situation is going to play out. That will directly feed in to how they see the US dollar. The US government has got this Doge effect going on. It's gradually reducing employment in the civil service type sector. Depending on how quickly that plays out, it could boost the unemployment rate up to 4.5%, maybe even 5% this year. That's what investors will be looking for, and how the Fed could react to a change in the unemployment rate. That's why they're pricing in several rate cuts for this year. What Jerome Powell has to say could reinforce that dovish outlook. That could make investors even more excited about the possibility that the Fed will come into play by cutting interest rates at some point this year, maybe earlier than expected. That's all negative for the US dollar. On the flip side, you need to have some positive stories in other major currencies. Well, clearly Europe is one of those. People are getting excited about the possibility that Europe is going to increase spending across the board to boost its economy and boost defence. That's a very positive euro story, and the euro is the second most important currency in the world. So as money shifts into the euro, it goes away from the US dollar, and even the yen as well. Bank of Japan is likely to remind people they haven't finished raising interest rates this year. That's a positive for the yen as well. So that all feeds into the fact that the US dollar probably has more downside this year.
All right, that was our MLive strategist, Mark Cranfield in Singapore. And coming up, we're going to speak exclusively with the head of the Philippines' largest telco. That's as it prepares for the public debut of its Alibaba-backed fintech arm, Gcash. That conversation just ahead. This is Bloomberg.
Good morning and welcome back. You're watching The China Show. Now, a stock in focus for us today, Globe Telecom, down about 0.5%. We did have news earlier this morning that Globe Telecom is inking some loan deals as it expands some of its capital expenditure. And what many investors are watching very closely is, of course, the upcoming IPO of its fintech arm, Gcash, the country's leading cashless payments platform. Current Gcash backers include Alibaba, Japan's Mitsubishi Mitsubishi UFJ and through its parent, also Singapore's Singtel.
Yeah, and actually Bloomberg's learned as well and has reported that the listing could be worth $1.5 billion, which would be a record for the Philippines. Let's get more with the Globe Telecom CEO, Ernest joining us exclusively from Manila this morning. So, Ernest, thanks so much for your time. I think we can start with the IPO and this expectation around Gcash in particular. Just give us a sense of the timeline for this and when exactly you're thinking it's going to be taking place.
Well, first of all, good morning and thank you for having me. As far as timeline is concerned, we're in the throes of preparation. And there's a lot of things to consider as we go. Market situation in the Philippines, as you know, is still quite dicey at the moment. Liquidity is low. Prices are still, flat, if you would. But the company is really preparing itself, working with different consultants, bankers, lawyers on the various aspects of the IPO at the moment. Of course, the company itself, operation is also getting ready, tightening up cybersecurity, all of our compliance, and so on. So there's still quite a bit of work to do. End of year could be a possibility, but looking like a stretch. But really for Mint, or the parent of Gcash, there really is no hurry to do this. I mean, we want to do it when it's right for everybody, when the conditions are right, when we are ready and well prepared to get it done.
Ernest, you have previously talked about the need and advocated for a lower minimum public float requirement here. Can you tell us about some of the conversations that are being had with that, whether you're speaking with regulators? What is the discussion and what are the sticking points there?
Well, so far, Rebecca, there have been no sticking points. We have not formally filed anything at the moment. All we've done is had sideline conversations with regard to the lowering of that 20% requirement. What we are pushing is the fact that given the size of this IPO, 20% may be too high, given that the market may not have seen the size of IPO. We're hoping that a lower amount will make absorption by the market much easier, will also make things a lot more easy to distribute. And, I think the rules that they've been set in the Philippines have been set for some time. They've been set for maybe smaller IPOs. But I think they should look at the rules and look at amending them, I should say, for, depending on the size of the offering that's going to be coming. No?
So what would be, though, the appropriate requirement then, do you think, for a business and a listing of this size? What are you actually arguing for, making the case for?
I think our range, Annabelle, between 10 and 15% is good. It gives us that room to play with, depending what we see demand shaping up, although there is quite a bit of interest from foreign investors in the issue. I think flexibility to be given to the firms that will be listing will also enhance the ability of the firms to go public and maybe increase the number of IPOs in the Philippines, to date, right?
Ernest, you saw pretty robust revenue coming through for your previous earnings. I want to ask about your strategy for the first quarter. What kind of numbers are you seeing so far? What is driving your earnings? And are you expecting those trends to carry you through the rest of this year?
Yes, for the telco business, the business is quite stable. We're seeing low single-digit growth, which is typical for most telcos that are mature, markets that are mature. We're very much focused on enhancing our EBITDA margins, which today sit at around 53%, and getting more efficient on our capex. Globe, or I should say the Philippine market, went through a huge capex spree over the last 3 or 4 years. And right now, I think it's time for us to extract the value from the investments we've made, at the same time ensure we have a sustainable business from a cash flow perspective.
And in terms of the trends, I just want to sort of follow up a little bit more. The trends that you think are determining and driving your revenue through the rest of this year, are there any new sort of revenue streams that you're exploring?
Well, what we're seeing and what's top of mind for me is the acceleration in take-up of our prepaid fiber offering. It's a first in market to be done purely online. It's a stripped-down cost offering. Obviously, prepaid and fiber don't usually come together, but we believe that we've been able to to get the formula right. We're in excess now of 300,000 connections and growing very, very nicely on a month-to-month basis. Also, the increasing adoption of 5G handsets in the country will also drive quite a bit of mobile data usage. And that, again, should drive more mobile data revenues as well.
Just going back to the IPO, I'd love if you could be a little bit more specific on the timing. You were saying maybe it could be possible by the end of the year, but if it's not by that point, when do you think then is your target?
Well, Annabelle, we'll go on a quarter-on-quarter basis when we're ready, right? I mean, there's so many things to consider, as I mentioned, and things still come up on a month-on-month basis as we speak to our consultants. Indexes and their requirements for inclusion have to be considered as well, given that this is going to be a pretty large cap for the Philippine market when it does come out. And we want to ensure that we are included in most indices, given that the funds do look at that when they choose the issues that they will be investing in.
Yeah, and just given the size of it as well, what kind of conversations are you having with cornerstone investors, for instance, and what kind of profile would those companies have as well?
Well, my own informal conversations of the last, let's say, 2 or 3 months have been focused on long-only funds who are interested in bringing cornerstones. 2 or 3 of them, very large, very familiar names. Obviously, I can't give you their names at the moment, given that we've not signed anything. But all I can tell you is that international investor interest has been quite robust.
And international interest, are you talking about U.S. firms? Where are these companies coming from specifically?
U.S., European, Japanese funds, they're all quite interested in the market or in the company. Obviously, it's quite an interesting company, given the fact that, Mint, GCash, is one of the few, if not the only fintech that's been able to turn profitable quite early, just on the payments business alone. And being able to drive our lending business is the current focus, as well as our international push.
Given you're retiring as well, I mean, you'll be stepping down from this specific role as a CEO effective April 2025, so you don't have too long left. But what's sort of the plan then for the stewardship of the IPO moving forward?
Well, for continuity, I will be staying on as chairman of Mint and really be focused on helping the company go public, providing stability. I'm also advising the management team on an ongoing basis. So really, for the Mint GCash team, nothing should change. For Globe, we've named a successor. His name is Carl Cruz, with extensive FMCG background and some background in telco as well. And the transition is ongoing, and we expect to hand over the reins to him around the 3rd week of April.
Ernest, thank you so much for joining us this morning. That's Globe Telecom CEO Ernest joining us exclusively from Manila. And if you're a Bloomberg subscriber, you can catch up with all of our interviews by using our interactive function TV Go. You can also join the conversation by sending instant messages to our team and our guests during the live shows. Please do go check that out at TV Go. There's plenty more ahead. You're watching The China Show. Good morning, you're watching The China Show, and here are some of the top political stories we are following this morning. President Trump has signed a stopgap funding bill to keep the government open for the remainder of the fiscal year. It paves the way for Republican lawmakers to pivot to signature border and tax legislation in the coming months. Congress narrowly passed the GOP plan on Friday with the support of Senate Democratic leader Chuck Schumer and a handful of other party members. Chinese authorities are increasing pressure on CK Hutchinson over its plan to sell its Panama Ports stake. The Hong Kong and Macau Affairs Office shared a second newspaper commentary in a week on Saturday. The editorial by Ta Kung Pao questioned if the deal harmed China and was, quote, aiding evil. The agency first indicated its displeasure over the transaction last week by sharing an earlier commentary by that paper accusing the firm of groveling.
All right, taking a quick check on markets here. We're just about 6 minutes away now from the monthly activity data dump that we get. Watching for those numbers, of course, but in the meantime, some of the movers are focusing in on Baidu is one of those names. So we had a new AI model being released over the weekend. This is something that they're saying could be a competitor to DeepSeek. Of course, Baidu was one of the early frontrunners in the AI race within China with the release of its Ernie bot. Since then, it's certainly ceded a lot of ground to other big names like DeepSeek, for instance. Switching on, taking a look at some of the auto names this morning as well. CATL, one of those, because we saw its 2024 profit climbing 15%. So strong EV battery demand that continues. That stock fairly flat so far. Geely a little bit under pressure. They've just released a new business plan essentially to try and cut costs. BYD that's rolling out more faster charging stations. And Li Auto, you can see there under pressure. Equities, again, slightly in the red. Welcome back to the China Show. We have got a briefing that's just about to get underway in Beijing this morning. We've got, of course, these data dump figures. They're going to go through retail spending, fixed asset investment, the employment outlook as well. Just some of the metrics we're watching for very closely. How is the Chinese economy faring as we kick off Trump 2.0? Of course, these numbers could become a little bit irrelevant given you've got all these stimulus announcements that happen post these ones coming into effect, or this data, because it's for January and February, but still lots of anticipation around this morning.
Yeah, that's right. And as we wait for the final countdown for some of that data to come in, let's bring in Helen Qiao, Chief Greater China Economist at BofA Global Research. And we'll just look at some of the breaking lines that are coming through. So fixed investment rose 4.1. The estimate was 3.2. We have retail sales also coming in higher than estimates at 4%. Pretty robust. Industrial output rising 5.9% versus that 5.3%. Your quick, immediate reaction to some of those numbers?
I would say out of the three, IP is probably the most important highlight. It is higher than market expectation and also higher than our expectation at 5.0. So I would say Jan Feb combined, that's a very good, solid number. I was a little bit worried previously that commodities and also, construction-related sectors might be a little bit under pressure. But if you look at that IP, that probably means that it is probably doing okay. We need to look at details, but the headline looks okay.
What is the risk here, if the numbers come in more robust than expected? Do you think that moderates the market's expectations of stimulus, or perhaps sort of a more restrained approach to stimulus?
I think the market is probably paying the most attention on the retail sales number, which at this point I would say it's not necessarily too scarily high, nor is it too scarily low. And therefore, I think that's in a very nice and comfortable range that it's lying in, so that it probably implies that further policy stimulus is still warranted. And at the same time, it is not necessarily, too weak so that people would worry immediate impact before the policy kicks in. So I think at this point, the fixed asset investment numbers are also quite interesting. Let's see the details, and hopefully we can find out more about the property and the infrastructure breakdown.
There's sort of this Goldilocks figure that we're now looking for.
It does seem to be, not it's good, but not so amazingly good that it's going to panic everyone. But we just got the MBS briefing that started here, and they're saying that domestic demand is still insufficient, and of course we know that because China's really focused on trying to boost consumption this year. What do you think we're going to get out of this briefing then later today that's been reported by Xinhua?
Well, if we look at the data by itself, I think Jan Feb data offers the first sneak peek into what's going on in 2025. To be honest, we had so far only the very, periodical kind of, little peaks here and there, just to find out, for example, during the Lunar New Year, 7 days holidays, how retail sales have been doing and how people's confidence has been, but not necessarily solid numbers. This is the first time we combine Jan Feb together, and pretty much this can give us a more assuring number without the disruption from the Lunar New Year seasonality effect. And this number is telling us that they're still doing okay, and we probably would see, I would imagine, the breakdown would show that home appliances, which is receiving more policy stimulus, is probably seeing stronger growth, while in other areas, for example, we need to look at dining out. That's probably, gives us some sense of where service consumption has been. And therefore, I would say that the details still is very much warrant, a closer look, and it will give us a lot more details regarding what else they could potentially promote from a policy perspective.
We did have some preview of those details that might be forthcoming from the statements that came over the weekend about China's plan when it comes to consumption. What are sort of the meaningful steps that stood out to you? I'm thinking about things like childcare or perhaps these pledges around minimum wage. Is there anything that indicates a more structural shift in terms of Beijing's attitude towards consumption?
First of all, I would say that policy action plan is completely consistent with the message from the NPC. We actually published in our NPC takeaway specifically saying that they mentioned, consumption more than 50 times this year in the national, government working report, and about 1/3 more than usual than previous years. And that by itself really highlights that they are placing a lot of emphasis on consumption this year. And therefore, I think that now they're talking about all these action plans, including promoting, income, boosting consumption, and providing the insurance, etc. So we need to see the details to know how exactly this can be done, because the actions are louder than the words. But I would say that I would imagine, for example, some of the subsidies on newborns, such as those that are coming out of Inner Mongolia province last week, was probably a good start. Now the investors are saying, oh, maybe it's not just Inner Mongolia. Maybe we'll see it in other provinces as well. If that is the case, then I think that could potentially bring back more and better sentiment.
But on that point, then, do you think then to really meaningfully see consumption recover in China, you think it's going to have to come from the services side? Because I guess things like consumption vouchers and trade-in programs could be sort of maybe helping to mask the full state of the picture.
Well, I would say that, yes, we have seen probably some temporary help from such policy stimulus so far, and that particularly feed in well into the consumer goods side. However, for consumption, going forward on services, I think that's probably holds the key on overall, consumer, outlook. At the moment, we think that there is more government can do, but the most important thing is for consumers to restore their confidence, which is underpinned at the end of the day, in our view, very much well hinged on their outlook of their future income. If they think that they can have job security and also income growth, they will be happy to spend. But otherwise, temporary measures are not necessarily going to help for too long.
I mean, a big component of this confidence question, of course, is what we're seeing in terms of the credit. And just to be sort of backward looking for a moment, we did finally see aggregate financing outpacing the stock of loans to the real economy. That's a chart as well on the terminal you can see. So that dynamic is actually emerging for the first time since 2018. We had a bit of a blip in 2020, 2021. But what does that shift in that dynamic tell us about the Chinese economy? Is this something that you think we'll see continuing, or do you think that sort of demand for credit is going to come back?
Yes, that's hopefully only temporary. What this means is that the government has to step up on borrowing at a time when private sectors, for example, companies and also individuals, households, do not necessarily feel that they have the risk appetite. But we think that the government borrowing stepping up, it should be temporary in the sense that they should be invested in the more profitable areas, generate more jobs, so that actually it can boost the sentiment, and then people all come back and borrow more, so that the credit demand would have a more thorough recovery. And we wouldn't be expecting that everybody is sitting back and only the government is borrowing, right? So we think this is only temporary, but it takes time. We think probably in the next 5 to 6 months or so, we will see the turnaround, and hopefully led by a stabilization of the property market.
All right, Helen, stay with us. That's Helen Qiao from Bank of America Global Research as we continue to digest the latest activity numbers out of China. And still ahead on the China show, Leapmotor was one of the best performing stocks on the Bloomberg Electric Vehicle Index last week. We're going to be speaking with its co-president, Michael Wu, later this hour to discuss the outlook for the company as China ramps up its support for the consumer sector. Plenty more ahead. Leapmotor about 5% to the downside. This is Bloomberg. Taking a look at some live pictures from Beijing this morning, the National Bureau of Statistics is holding a briefing which has had the data dump at the top of the hour. Recapping some of the headlines from that, we saw numbers coming in largely a bit better than expected. So industrial production, for instance, expanding at a 5.9% rate. That was higher than the forecast of 5.3%. Retail sales up 4%. Again, the forecast 3.8%. Fixed asset investment growing at 4.1%, above the 3.2% median projection. So all of these largely beating estimates from economists. What's a little bit unwelcome is the unemployment figures that's, again, risen to the highest level since February 2023. But let's bring back Helen Qiao, Chief Graded China Economist at Bank of America Global Research. And Helen, we were just discussing there as well in the ad break, property development investment, which was down nearly 10% on the year. And we had as well the property price figures coming out early this morning, new home prices, used home prices as well. Do you think we're seeing a bit of a bottoming now in the property sector?
Well, we think that we're probably seeing the beginning of the bottoming out. This is because that if you look at the new property prices, while it is still going down, we think that the magnitude of how fast it went down compared to before was actually stabilizing. At the same time, I think that we're starting to see more volume coming back not only to the secondary market but also to the primary market. At this point, what we need to look forward to, in our view, is probably some further signs of stabilization in the secondary market so that prices will start to stabilize and maybe tick up a little bit. We saw some signs of that, especially in Tier 1, Tier 2 cities, a secondary market in the past 2 months. We think that should be the, kind of the first light from the dawn. And effectively, this is saying that if sellers are looking at the prices and they found that the prices are increasing, some of them may actually feel like there's no rush to sell, and therefore they actually would remove their properties from the selling list, and therefore we will see better demand relative to supply in the secondary market, and prices go up further, pushing the buyers back to the primary market. That the new property market, then you will see they finally get enough demand to stabilize prices, and then finally they could see more volume coming back. So we are expecting this shift to take place from secondary market to new property market, and that could probably be in the next 3 to 6 months or so before we call it an overall stabilization.
So you're expecting that dynamic to persist. Is that irrespective of what further measures we see in terms of efforts from Beijing to stabilize the markets? We did have a promise over the weekend that Beijing will be taking further steps. Is there anything more that authorities can actually do?
Well, I would say that the government probably have done most of what they could to support the property market since last October. We also saw that those that were hesitating, those potential buyers who really have the demand to, maybe buy a property to get married, to have the next child, etc., they have already come out. This is because I think people were no longer expecting a large change. Look at the mortgage rates; it's already at a historical record low level. Look at the down payment requirement; it is the loosest since we have seen, and therefore I think at this point we probably can only imagine, that there could be very incremental, marginal, policy help, but the most should come from the market itself. So we are expecting the stabilization probably going into the second half of this year. But at this moment, I would say unless the sales and the prices stabilize, the investment that Rebecca just mentioned, I think was probably going to suffer a little bit, because we are still seeing minus 10% contraction, basically on the fixed asset investment side under properties, and that is not going to turn around unless the developers see better demand coming back.
And it's difficult to see lots of demand coming back as well when you take a look at the unemployment rate, and I just mentioned before, but it's at 5.4%, which is the highest level going back to February 2 years ago, 2023. So, I mean, we know that that's a priority for the government, but what more measures do you think we can expect on that front?
Well, I would say that probably they would just mention that we would try to boost income and stabilize the people's expectation and restore confidence. But I wouldn't necessarily expect that from a central government top-down perspective. There is much more to be delivered in concrete details. But we would see probably something coming out of the local governments. So because they have more potential room for easing in terms of rolling out vouchers or helping, individual households, and also beefing up their social security network.
When you look at the numbers that we have seen coming through today for January, February, you think about the MPC plans for stimulus, as well as, to your point, some of the sort of mechanisms that might come through from local governments. All in all, has Beijing done enough to put off some of these longer-term deflationary pressures? Where do you think we get to when it comes to inflation figures for 2025 and 2026?
Oh, that's a very good question. I would say that we are only seeing the beginning. What MPC offers is only a curtain raiser that, we're about to do this, but we don't know how much is going to materialize and at what time frame, right? And the second, I think very importantly, we're not so sure about the tariffs, right? So, if the tariffs are going to see further hikes from here, let's say another 10% in April, or 10% every single month until the end of the year, we'll be at 100%, right, from the U.S. Well, that notion seems to be far-fetching. I don't think that is a probability zero event. So we now still have very high level of uncertainty regarding how much of easing is warranted, partly because of this extremely uncertain exterior environment. And therefore, I think that now it's probably the best idea to err on the side of overstimulating rather than understimulating. And therefore, I would say that there's clearly more that they can do, not only on consumption, which is being prioritized, but also possibly to help investment.
It's an interesting point on erring on the side of overstimulating, because that has not been Beijing's stance so far. So two questions before we close out. One is this a fundamental watershed step change moment for Beijing's attitude when it comes to stimulus? Is that how you read this new phase? And secondly, when it comes to tariffs, China now is not just concerned about a 10, 20, 30, 40% tariff raise that you're saying from the US, but also about this risk of a cascade of tariffs from other countries.
Trading partners.
Yeah, I mean, Vietnam, South Korea,
Mexico.
Canada, Mexico, and so on. So how do we weigh up these two things? On the one hand, have we seen this fundamental shift in the perspective from Beijing? And two, how concerned and how risky are some of these tariff threats now?
I think, first of all, it's probably what they should do rather than what they will do at this point when we talk about they should err on the side of overstimulating. If you look at what the NPC is saying, they're basically still saying that, they're giving a very consistent message as they did from the, working conference in December, and they're saying they're going to be extremely flexible. This basically means that I don't want to put in too much right now and regret later. I want to see how much is warranted and then make, a reaction by them. So that, I think, is so far what has been expressed, but we hope that they can step up lot more. Now, if you think about how much of all these easing is going to offset the pain from tariffs and also the picture on tariffs. Unfortunately, those uncertainties are so paramount that I think it's really hard to tell from a China's perspective whether they would be assuming, as a contingency plan or actually a barricade scenario that a lot more trading partners are going to stand together with the U.S. against China. At this point, I don't necessarily think that is the most likely outcome, especially given the back and forth on the U.S. Trade tariff policies. And however, I think that's definitely, we are definitely seeing some rising probability that this could potentially come and harm China. From China's perspective, I think they are a very strong supporter still of the multilateral trade mechanism in the world, and they still want to be open. I think it's a little bit of sarcastic to see that China is steadfastly holding on to this notion that we need to be open, we need to be pro-free trade at this point, while the rest of the world may not necessarily, support as much.
Right. I mean, you need someone to trade with, essentially, right?
That's
Just
right.
to break it down to basics. Helen, so fantastic to have you breaking down the very latest data with us. Thank you so much. That's Helen Qiao, Chief Greater China Economist at BofA Global Research there. And you can also tune into your Bloomberg for more on this. You can go to T-Live Go to get the very latest commentary analysis from Bloomberg's expert editors. You're watching The China Show. There's plenty more ahead. Stay with us. This is Bloomberg. Good morning, you're watching The China Show. Now, Geely Auto is set to report its latest earnings on Thursday. Its billionaire founder, Li Shufu, is now shifting his focus to cost-cutting after more than a decade of expansion. Our Asia Transport reporter, Linda Liu, joins us now. So, Geely's new chairman has announced the Taizhou Declaration. Tell us, what is this strategy? What does it mean for the company?
Yeah, so the Taizhou Declaration was first published last year, and it really puts a focus on consolidation. That means, merging its brands to try to create synergies and remove redundancies in the company. One of the first moves we saw after this statement came out was the streamlining of two brands, Zeekr and Lynk & Co., which offered kind of similar products in premium, high-performance EVs and smart cars. So we're going to be watching the space for more consolidation coming up in the future.
Yeah, and I guess the portfolio of brands underneath Geely aren't exactly doing super well. So is this why they're changing direction at this time?
You'd be right. Some of the EV brands like Polestar and Zeekr, they're still, suffering losses. And you've got Volvo, which is caught up in all of this geopolitics because some of their cars are made in China and exported. So there's a lot of pressures coming from outside of the company, and inside of the company with so many brands is going to create all of these costs and resources. So by consolidating, they can really shore up essentially resources, try to create a war chest to help them navigate this really uncertain global environment.
I guess, to your point, we've got this really fierce domestic competition. They're trying to catch up with BYD. We also have all these uncertainties in terms of tariffs and risk to the supply chain. How effective can this strategy be? Is it going to be enough?
I think analysts think that it's a first step in the right direction because for a while now, with all of these brands under the Geely Group, people were wondering whether, some of these may have overlaps and whether it's becoming a bit unwieldy to have so many brands. So consolidation is definitely the right first step. Now, whether Geely can catch up to BYD, we're still watching that space really intensely. There is quite a big gap right now, although Geely is growing very fast. So having these consolidation strategies may help Geely to put it in a better position to take BYD on.
Yeah, especially when you've got BYD rising in anticipation of that new EV powertrain platform launch as well. But that was our Asia Transport reporter, Linda Liu. And in a few minutes, we've got more on EVs because we're going to be speaking exclusively with the co-president of the Chinese automaker Leapmotor. That's Michael Wu. So stay tuned for that. Quick check on markets as well, because we are 26 minutes post the data dump coming out, and we are also taking a look at some of the other big movers in the session. So this weekend plan, for instance, plans to raise incomes, boost consumption, so trying to drive that economic engine, essentially. We are seeing some of these consumer stocks moving to the upside this morning. Also taking a look at China oil stocks today. We have seen oil just broadly rising, but energy stocks are gaining on better activity numbers. The numbers coming in mostly better than expected. Goldman Sachs as well, they've cut their Brent oil forecast by $5 to around $71 a barrel. Again, we have seen oil just tracking a little bit higher after we saw President Trump stepping up attacks on Houthi militants as well. But more ahead, this is Bloomberg. It's 11:29 a.m. in Tokyo this morning, taking a look at how Japanese equities are faring as they head into their lunch break. So, look, it's a positive start to the week for the Nikkei 225. We did see the S&P 500 ending Friday up more than 2%, so it's a bit of a flow across from that. But also we've seen the Japan wage negotiations and the results from those, biggest pay jump that we've seen going back a few decades. And so that is something, again, that is positive, puts a bit of pressure, of course, on the BOJ, and does that sort of bring forward rate hike expectations, even though a lot of economists we've been speaking to are still expecting a cadence of a hike once every, say, 6 months. Japanese yen, it's fairly steady there, but again, another dynamic that's going to be interesting to watch for the BOJ is that broader dollar softness theme that's coming through, and that shift away from the US exceptionalism story that's really permeating through markets. Taking a look more broadly, because we've got the Asia gauge up more than 1.1% to start the week. Even as I said, US futures a little bit weaker here, dollar gauge fairly steady. Clearly, IT stocks are the standout in the session so far, because you've got the IT index up 1.8%. Again, there's sort of two themes at play. On the first, you've got this NVIDIA conference that's coming up later this week, so we'll get more of the details around AI in particular, but other more sort of frontier technologies like quantum, for instance. That's going to be a feature at GTC this week. In Asia, it's most certainly the story around this re-rating that we see on Chinese innovation, Chinese AI led by DeepSeek, but really across a range of different sectors and industries. What else to note as well? You've had the monthly activity numbers coming out, but Beijing pledging to boost consumption in particular over the weekend.
Yeah, I mean, to your point about re-rating, the question now is whether or not we see a structural or longer-term shift in Beijing's willingness to improve consumption. It was, of course, the #1 priority when it came to the MPC. We had Helen Qiao of BofA talking about, it being mentioned more than 50 times. Very much a focus. Is it going to be a long-term focus? And how does that spill out into momentum for the broader equity market? And of course, one of the beneficiaries of this measures and the consumption boost writ large is, of course, China's EV sector. According to Bloomberg's electric vehicle index, Zhejiang Leapmotor in particular has been getting quite a bit of love from investors. The firm's co-president Michael Wu joins us now. Michael, I mean, part of that love that we've seen outperforming over the last few days, some of your peers, is off the back of your earnings. You're the second ever Chinese auto startup to shift into positive territory. That was for the fourth quarter. Overall, your full year, you narrowed on those losses. What timeline are you targeting now for break-evens?
Right. Good morning. Thanks for having me. We target to continue to grow our business and develop our business gradually over the coming 4 quarters. We do expect to turn overall annual profitability in 2025. Yeah.
And in terms of that break-even, any sort of specificity around the timing of when that might come over the next 4 quarters?
As you know, we have turned profitable in the fourth quarter of last year. That was the first quarter that we turned profitability. That trend will continue in the 2025. Obviously, the first quarter tends to be the weakest in the year, but we have a good, strong product launch. We launched the B10, the SUV, which will be being delivered early April. So the second quarter, third quarter, fourth quarter, we expect them to be quite strong. So overall, for the whole year of 25, we think we can turn profitability for the whole year.
So the target for vehicle deliveries is somewhere at 500 to 600,000 units for this year. Potential upside of maybe 700,000 vehicles, but what are the conditions for that to be met, and how likely is that as well?
Right now, looking to the 2025, we focus on the 500,000 the delivery. We want to make sure we can get this number to make it a solid foundation. And then by working hard and on the back of the government support, on the back of consumer willingness to consume, and also mainly due to our main product competitiveness, we hope to get to sell more than 500,000. But 500,000 is some number we want to achieve. Absolutely, that's a minimum we want to get to.
You mentioned government support there. Potentially we have the end of the purchase tax exemptions for EVs, and potentially we don't know what's going to come up when it comes to subsidies, whether or not they will be continued. Do you have a contingency plan for the end of subsidies and the end of sort of that consumption support? And do you have a contingency plan for the end of the tax exemption for purchases?
Right. Our observation is this. The subsidy from the government is only a help or a kind of catalyst at certain times. But the long-term growth prospect for the EV sector in China has been very well established. We're about 50% penetration. That means every one car in every two cars sold are some form of new energy cars. This momentum is going on with or without government subsidy. Government support and subsidy helps, right, in a temporary manner to address some weakness in consumer sentiment. But our view is, with or without it, the trend of electrification will continue. This is the biggest foundation for overall growth in the coming quarters and years.
It's so competitive, though, and the innovation cycle within Chinese EV makers is so short now that you really do need to be always adding extra capabilities, extra technologies. Autonomous driving is one, and we've seen BYD, for instance, implementing some capabilities across pretty much all of its fleet. Right. What are you thinking in this space in particular, and how much of your resources are you committing to it?
Right. Leapmotor comes from electronics background, the founding teams. So we're very unique in that kind of a background. What that means is we're very familiar with the so-called Moore kind of law for the electronic products. Every year and a half and 2 years, there's iteration of new products. So in order to provide the most competitive cars to the consumers, we need to upgrade, come up with the new things all the time. Every year and a half, every 2 years. So autonomous driving, as you mentioned, is one of the features. We actually started the positioning in autonomous driving a while ago. It's just that this year, as you mentioned, when there's a big event from the companies in the market, that provides a very good education to the mass market. So people are aware that, EV does have this good advantage of autonomous driving. That actually helps us as well. So, our latest B10, the SUV that we launched, in the first two days, we received more than 31,000 orders, and more than 70% of the orders are for the higher autonomous driving features, specifications.
When would you see, though, you rolling out autonomous driving capabilities across all of your fleet? What would be your timeline around that? And how would you look to do that as well? Would you look to partner, for instance, with a name like WeRide, for instance, we spoke to earlier today, or Momenta, Deep Route? I mean, there's a range of different partners you could work with on this.
The timeline is in this May, June, and July. We will have the annual facelift for our so-called C-Series cars. C-Series cars include, 3 SUV models, 3 of them. They will be all equipped with the standard, the advanced autonomous driving features, with LiDAR, with all of this stuff. in middle of this year. And other models, we have already provided consumers the option. You either go for a more advanced autonomous driving specifications, or you could choose a lower price, a lower one. So basically, the answer is we have provided. We have all equipped all our cars.
When would it
right
be
now.
standard, though?
Standard in May. By May, our C-series cars, the SUVs I mentioned, will all have standard autonomous driving. Now, the next thing I want to say is our autonomous driving is more advanced in comparison to most of other models that have been announced, with a very competitive pricing and also the features. That is because we self-develop and research all of the hardware, software in connection with autonomous driving. So we are the most vertically integrated car companies in this regard. So we develop the whole system, algorithm, software ourselves. So in a way, in this regard, we are the tier one suppliers to ourselves. Although I do want to point out, we do buy from Qualcomm and NVIDIA the chips. The chips we don't do, but anything other than chips, we self-develop. So because of that, that gave us the flexibility and the pace to market. We're faster than most of the peers.
So part of the geopolitics of the moment that we're in is we've seen this localization push. We have heard some reports about new partnerships for Leapmotor's state-owned manufacturer FAW Group, potentially with Ferrari. What can you tell us about some of those partnerships that are happening?
Right. Yes, we're very fortunate to be recognized by the Stellantis as our foreign partner, also by FAW. Right now, we're working with the Stellantis group in a full scale outside of China. We're launching the cars in Europe, South America, Middle East, Africa, and Asia. So we're working very well with Stellantis. FAW is another new dimension. They are very large state-owned enterprises in China. We hope to jointly develop some EV models together with FAW.
And is that Ferrari, is that deal still in the works? Is that partnership coming through?
It's preliminary. We did have a good interaction, meetings, as you see, their CEOs came over to Hangzhou. We had meetings. So the discussion will follow to see where the collaboration could make sense.
US tariffs, I mean, that wouldn't perhaps directly impact you, given we don't really have any exports of Chinese EVs to the States, but there's still the supply chain angle and how you would be grappling with that question. Right. Related to that as well, you mentioned, of course, that you're buying technology from Qualcomm and NVIDIA. If you see an expansion of the restrictions on exports to China of advanced technology, how are you going about that, and what are your contingency plans that are in place?
Right. China has developed very strong and comprehensive EV supply chains. For the chips, if there's any restriction, that will not affect the companies like ourselves, because there are local suppliers in case that happens. But we don't think that will happen because we don't think the chips used in the EV cars are they targeted or I mean, it doesn't even make sense. I mean, broadly speaking, this kind of sanction actually could help the Chinese domestic to develop even faster. I think this is one of the unintended consequences of these sanctions. So we're in we're fully prepared, one way or another.
Yeah, I mean, I think that is sort of the flip side, of course, is the more you restrict, the more you push for promotion of the industries within China. So, yeah, as you mentioned, EV chips, they're more older technology, more legacy technology, not the most advanced, but you never know how far these restrictions go. So which name, are you already buying from Chinese smartphone companies or chip semiconductor companies, rather?
We have good contacts and with all the chip suppliers. Right now, we work with the Qualcomm, on the chips. In our new model, the new SUV, we adopted their, 8650 solution for the autonomous driving. By the way, we're the first one in the industry that that uses on the mass products.
Would you preemptively switch, though, to a Chinese semiconductor?
We don't have any plan. We'll see what happens.
Just thinking about that domestic space for you, I mean, there's such fierce competition in China. Are you rethinking your pricing strategy? How are you approaching this?
Our philosophy is to provide the customers with the best value products. What that means is, at the same price with the competitors, we'll have more features, more things for the consumers. Or, for the same level of specifications, we'll have better price.
So how does that strategy affect your bottom line then?
First of all, we have two things on the bottom line. One is the volume. In this business, it's a scale business, especially in this stage of development. We need to become the mainstream automaker. But for example, this year, we sell 500,000. Next year, we'll target to achieve more than 1 million, and so on. So this is important in terms of scale. That helps the bottom line. But on the other hand, we have a superior capability in cost reduction, in cost management. So as while we offer the most competitive price to the market, our margin will continue to improve. That's evidenced by the last 8 quarters. Every quarter of the last 8 quarters, our gross margin improved. The Q4 of last year, we turned a profit. So we'll continue that work. So these two things will help us to achieve not only the scale, but also the profitability, in the end.
Yeah, and I think the full-year margin target is 10 to 11% for this year. All right, Michael, thanks so much for taking the time to come into studio and speak with us this morning. And as we said, Zhejiang Leapmotor, one of the top performers in Bloomberg's EV index over the past few sessions. But that was Michael Wu there, co-president at Leapmotor Technology. And if you're a Bloomberg subscriber, you can catch up with all of our interviews by using our interactive function, TV Go. You can also join the conversation by sending instant messages to our team and our guests during our live programming. So check it out at TV Go. This is Bloomberg. Going back to some live pictures here from Beijing, we've got the National Bureau of Statistics holding their briefing, recapping and really passing through all of these numbers for the monthly activity data dump that came out at the top of the hour. So the numbers at a headline level, a bit better than what economists had been expecting. But some of the headlines as well. The NBS is saying that there's going to be more challenges facing global trade growth in 2025. I think that's fairly obvious with President Trump back in office. The property market in some Chinese areas is going through adjustments. We did continue to see perhaps a slight further deterioration in the China property sector in the last hour when we had the new home prices, used home prices as well. Perhaps the first signs of stabilization. The NBS as well saying that some places are seeing pressure in stabilizing the property market, and the trend of China's CPI has not changed. So we'll leave that there and we'll shift to what else is a big story today, because tech generally is doing well in the session. Baidu, one of the names that's a standout because it released a new AI model that can articulate its reasoning. The firm is looking to regain momentum against up-and-coming rivals such as DeepSeek. Let's get more with our Bloomberg Intelligence senior analyst Robert Lee. And Robert, we've been saying today that Baidu was one of the early front runners in AI with Ernie, for instance, that they launched soon after ChatGPT. They've since, kind of fallen off a little bit. So what does this release now mean for the company moving forward, and how significant is it?
Okay, what you said is exactly right. They had some early market leadership, some first mover advantage. But progressively over the last 18 months or so, there's been the big tech platforms, the Alibabas, Tencents and ByteDance of this world have caught up to a large extent. And then obviously we've seen the disruption caused by DeepSeek. So I guess today's announcement is positive for sentiment. It shows that Baidu is still making efforts to stay in the game. But I think the big question on relating to what they've released today, their reasoning model, is, what's their competitive edge and how differentiated is it from similar models or seemingly similar models that the big competitors have launched? Because we've seen a flurry of announcement, almost not just one a week, it's been one every other day of companies coming out and announcing, something that surpasses the last one. So I suppose taking a positive view, it highlights the rapid rate of technological development in China. But the question I keep coming back to is, where's the monetization? Because most of these tools are available for free.
Yeah, we have seen this sort of flurry of announcements of various tools, but it doesn't necessarily seem like it's really diversifying the broader space. So I suppose, does this latest development actually add anything or change anything for the wider sector?
Again, I think China is making very rapid progress on the technological front. They're narrowing the gap with the US on the software side. It's perhaps a little bit meaningless to say, are they 6 months behind or less? But there's clear evidence the gap is narrowing. So that's great in terms of progress. But I would say there's a large degree of commoditization in the sector. Again, DeepSeek was one of the first to come out with a reasoning model. We've seen similar announcements, really, from all the major tech platforms. All these tools are available for free at the moment. All these companies are employing the same strategy. The technical barriers to entry are low. The pricing power that these companies have is low. The switching costs, again, are low because, for example, if you were on DeepSeek and it started charging, I think probably for an average user, you're more likely to switch to another platform that's free. Because in terms of technological performance, they're all much of a muchness to the average user. And that's the challenge. It's a very crowded, commoditized sector, which makes it very hard to monetize, let alone drive into profit.
Yeah, I think you're pointing to sort of the primary challenge, which is monetization and making money out of this. So what's the outlook? Is there any way that they can go about doing it, or are you trying to maybe get it through services like cloud, for instance?
I think, no, on the cloud side, and Baidu is a cloud vendor, although a relative smaller one, there is potential upside on their cloud revenues. And if you look back at the Q4 results, which came out 3 or 4 weeks ago, there's quite strong momentum on that side. So I guess that's a positive. But in terms of their market share and market positioning, cloud is ultimately a scale business, and therefore, in our view, we think the big platforms will win out. But the issue, I suppose, the problem for the sector is all these companies are employing the same strategy at the moment. Their tools are for free, they're trying to drive user growth, and obviously they're focused on technological development, which is a very expensive business. So going back to textbooks, you need to see a consolidation in order to help slim down the industry and drive it to profit. But with very large amounts of capital floating around the sector, with competition from some very well-funded tech platforms, it's hard to identify who are the weaker hands. Who are the ones suffering balance sheet pressure at the moment and likely to drop out. Yeah. Because in the absence of those companies dropping out, then I think the status quo continues. Strong progress on technology, monetization remains some off, return on investment remains somewhat distant.
Right, OK, Robert, thank you so much for joining us. Bloomberg Intelligence senior analyst Robert Lee there. There's plenty more ahead. You're watching The China Show. This is Bloomberg.
Taking you back to those live pictures we've got this morning in Beijing, we've got the National Bureau of Statistics holding their briefing, the data dump coming at the top of the hour. So you can see here the numbers on the right: industrial production, retail sales, fixed asset investment, all coming in better than what economists had been expecting. So it's a broader pickup across the board. Probably still not quite good enough, though, to cause any sort of concern about Beijing pulling back on stimulus, at least in the shorter term. The Hang Seng actually has rebounded pretty nicely in the sessions. We're up 1.5%. But again, just tracking some broader optimism in Asian equities today. Movers to note as well, because we've got lots of EV stocks in focus today. And EV adjacent, for instance, CATL, that stock has been moving after we had the company seeing profit rather for 2024 climbing 15%, a bit under pressure. Geely with a cost-cutting plan, BYD with new charging stations, and Li Auto, pretty significant drop there. More ahead.